Alright guys, I wanted to cover the topic of why pick income investing, why invest a lot of your money into like covered calls ETFs, option 0DTE trading ETFs as a young investor, as someone in your 20s, or as someone in their 30s or in their 40s, like as anyone who has time under their belt, who doesn't plan in retiring in the next 10, 15 years maybe. Why pick income investing? So bear with me. I made a little slideshow here just to structure a bit and whatever. It's not going to be the prettiest video that you'll see on YouTube, but hopefully the information is going to be useful. First, before I start getting into the explanations, the reason why I'm making this video is because I had many conversations with my friends when we talk about investing, and then they ask me or I try to explain to them what I'm doing is I'm investing into covered call ETFs, and then I explain to them what's a covered call, how it works, whatever. I tell them, yeah, but whatever, it's a covered call. So I'm capped on the upside. It's on the S&P 500, but the upside is capped, but in exchange, I'm getting income. By the end of the day, if you put the income and the upside together, it's basically trailing and following the returns of the S&P. And then they start arguing with me. They're like, okay, what's the point of generating income if you don't need it? And if it's tracking the S&P, why don't you just invest in growth? And then make as much money as possible for later or whatever. It's hard to explain to people the mindset of income investing. If you're like me, or if you're just curious about what's income investing, this video is for you. It's just send this to people who ask you the question. Tell them, yo, I had this video for you. Go watch this guy. He's going to explain to you my mindset. If you're wondering why people do that and you just stumbled on my video, then hopefully this is going to be interesting and kind of open your mind on why people are like me and they have this income mindset. So first of all, what is income investing? So essentially what I do is I invest in assets that bring me cash flow and appreciation as well. I want cash flow, but I don't want my money to go to zero, obviously. But my main goal is really income and cash flow. So that could be anything from real estate, car rental business, covered call ETFs, vending machine, anything that brings income. I'm happy to invest in it. But the point of this video is really stock market related. So when it comes to stock market, your main goal really is going to stay around income ETFs, so any ETFs that hold any holdings and trade options, and covered call ETFs, and basically the engine behind your portfolio or behind your investments will be income generating investments. Basically, when you're investing, you're kind of building your own quote-unquote income factory. You're kind of throwing money in your portfolio, and in return, your portfolio is throwing back cash flow at you. The more you invest, the more cash flow you get. And this is basically the idea, is just invest and grow your cash flow and let your cash flow compound over time. So what are your options? I invest in income investing, but there is no discrimination. Like I say to my friends or to anyone who asks me at the gym or whatever, people that I know, you have many options. You can invest into growth, you can invest into dividend growth, or you can invest into income investing, or you can invest in a bunch of other different style of ETFs, I'm sure, out there. There's also people who invest in leverage ETFs. I don't know. There's a bunch of different style of investing. But at the end of the day, when you compare growth investing, so investing in pure growth, so you don't care about passive income, you don't care about the dividends, it's only into assets that gain value over time. When it comes to the indices, for example, the S&P, or when it comes to dividend growth, so you invest in dividend paying companies. These are well-established companies that have a slow growth rate and they pay a good yield of around 3 to 4%, and their dividend grows as well over time. If you take into consideration the depreciation of these well-established companies plus their dividends, and you compare that to the return of the S&P 500, for example, and then on next to it, you take an income investor who owns covered calls on the S&P 500, you're going to see that the total returns are very, very similar over time. So that's what I'm saying, is that you have many options, and I think that if you are investing your money in the market, at the end of the day, you do what works for you. This is what works for me and what works for other people who have the same mindset. And you can't be out there telling people that you have to chase the total returns and that it's all about growth and making as much money as possible and growing your portfolio. On paper, it works. On paper, you're right. But at the end of the day, you have to find what works for you. And what I mean what works for me is that this cash flow that I see every month, every week, motivates me to invest more and throw more of my money in the market, in opposite to just seeing a number grow on a screen from a growth portfolio. This is just how I see things and what works for me. Just everything to say that you have options, and all of the options at the end of the day are all good. There's no discrimination. There's no point in telling people that they should invest in growth, dividend growth, or income. You have to educate people, and then people can play around and see what works for them. At the end of the day, like I said, as long as you invest, you're good. This is the quote from Warren Buffett. If you don't find a way to make money while you sleep, you're going to work until you die. aka if you don't invest your money into assets that gain in either in value or that generate cash flow, then you're going to end up working until you die, because in no way that you're going to work until 65 and live off your government retirement fund or whatever, which is pennies these days. So like you need a good financial education, and you need to understand that like investing is essential to secure a nice future and to maintain your lifestyle as you get older and as maybe you lose the ability to work and whatever. So very important to invest while you're young and while you have the energy to work and make as much money as possible. So who wins? Like I said, so here I have 3 columns. So covered call, this is XYLD from Global X. So this is just an S&P. It's like the OG S&P 500 covered call. It's been out for years now. I think it's one of the oldest ones with the biggest backtrack in history and everything. For dividend, I use the infamous SCHD. And for growth, I use VOO from Vanguard, so the S&P 500. I know that SCHD is not directly the S&P 500, but it's like the most popular dividend growth one, so I just use that one. So as you can see, the annualized return, this is from January of 2022. If you had done covered calls, you would have made 47% on a 10K investment. If you invested in SCHD, you would have made 44%. If you would have invested purely in growth, you would have made 53%. So yes, on paper, growth is winning, but the difference is not life-changing. And at the end of the day, like I said, as long as you're investing your money, as long as you're following the market, you don't necessarily need to beat the market. You just have to follow the market. You just have to beat inflation. As long as you're investing, you're doing something right. I think that no one wins. On paper, growth wins. The real winners are the people who are positive and smart and are just investing and doing what works for them, being consistent. As long as you're consistent and you have discipline and you invest month after month and you don't waste your money on depreciating stuff and you don't have too much liabilities like upgrading your lifestyle every single year, getting a new phone, getting a new car, you put some money aside for investing and you kind of sacrifice for the long term, you'll be winning. Why do I personally pick, and why do other people in my shoes pick income? That could be anything. That could be covered calls. That could be people picking some very high yield stocks from YieldMax. If you've been on my channel, probably know about OT and YMAX, but this video is kind of more of a broad video, so I'm not sure if I'm going to have people watching my channel that are not really into those super high yield ETFs yet. There's really a lot of options, and there's a lot of people that are like me and that are picking those high income ETFs. So first of all, I have more options. So what do I mean by that is that instead of getting appreciation through share price every month, every week, I get some cash flow coming into my portfolio on top of my shares appreciating a little bit. I have options to do whatever I want. Currently, I am young and I still have a job and I'm grateful. I just drip, so I just currently reinvest everything that I make. If one day I want to retire or I want to be semi-retired, I want to use a part of my income to pay for my mortgage, or if one day I want to move to a more expensive place or I have more expenses in my life, I'm stressed over those expenses, and using my 9-to-5 income would basically eat out all of my income, and then I would have nothing left in my pockets to enjoy life a bit, and I wouldn't be able to sleep at night. I would be anxious. I have options to go grab some money without having to sell shares. Second point is cash flow, obviously. Every time I invest, my cash flow increases. So it's just a feedback loop. It's kind of like real estate. You invest into a condo, you have a tenant, whatever. The thing that is cool about this is that it is very liquid. Every month I see my income increasing. So it's very motivating and cool to see your income grow over time and really see that cash flow slowly but surely catching up to your paychecks, and one day they're going to be paying more than your actual 9-to-5 job. And then, like I was saying, drip. So instead of having my price compounding, I just compound shares. So every month I'm able to buy more shares. 4-point, my peace of mind. Right now, the job market is very rough, and unless you're in a super, super safe field where you know you're never going to lose your job. I'm in a field where there's been a lot of layoffs and stuff. This really helps my peace of mind, knowing that if anything turns to the worst, knock on wood, I should be fine. At least I'll have some secondary income that could provide to just pay, at least cover my bills. It just gives you the peace of mind knowing that you don't rely on one source of income. And I think that even if you're working in a super safe field, pretty cool to have that peace of mind, knowing that you don't have to rely on one source of income and you have multiple pillars that are supporting your life. The consistent distributions helps in any market conditions. So the very nice thing about that is that you will never need to sell, and I will never panic sell, because when there's a down market, for example, in April there was a crash, I was still getting my cash flow, I was still getting my distributions, and these would just be reinvested. And since the market was crashing, I was able to buy more shares at a higher yield at a discounted price. In opposite for growth, where when the market crashes, you can't do anything but keep buying more and hope that it goes back up. Where here, at least I still have my dividends coming in. I can just reinvest them, or if I would be retired and living off of them, I don't really care about my portfolio's value. It's more about I'm still getting paid regardless of the market condition, and I don't have to be selling some shares in red to sustain my lifestyle. Last point, I'm not restricted to the crazy 4% rule of working until I'm 65, building a $5 million portfolio and hoping that if I take 4% of the value of my portfolio, it's going to cover my lifestyle until I die, and I just drain my portfolio out. I can just have a portfolio that has a yield of 12% plus, and then let's say that makes me 20K a month, and my lifestyle only needs $5,000 a month. I can reinvest the rest. My income is going to keep growing, and I'm never going to suck the life out of my portfolio the day that I decide to retire. My personal plan from now on, is increase my cash flow by reinvesting 100% of the distributions. After all my expenses every single month, like I was saying, I try to keep a pretty modest lifestyle. I don't have a fancy car. I don't live in a fancy place for now. Like for now, I'm really in my wealth building phase in my life. So I throw as much money as I can in my portfolio every single month. And I'm really trying to build wealth. Really, my mindset with this is that I'm trying to buy back my time. Instead of working hard and using my hard-earned money to buy a depreciating asset like a nice car to reward myself for my work, I'd rather throw all my money in my portfolio. And then when my portfolio generates me enough money to cover a car payment for a car that I really want, I could be able to get that car and it wouldn't affect my income. I wouldn't be taking a hit financially as hard as someone who's working and basically exchanging his time for the car. Now my portfolio would be paying for the car, so I'm basically buying back my time, and then with my 9-to-5 income, I can do whatever I want and I could keep investing more and keep compounding. That was it for the video, guys. So hopefully it wasn't too long and it was pretty interesting. So yeah, like I said, the reason for this video is just if someone asks you like what's the point of income investing, and if someone asks me again, send them this video and I'm going to be like, watch this and you're going to understand. Because when you're put on the spot in front of people arguing with you that you're dumb and they're trying to make you second thought your decisions, telling you that growth is smarter and everything and you don't need to income invest, it's like, I'm not giving you guys financial advice. This is just my journey, what works for me. This might not work for you, but hopefully if this doesn't work for you, just watching this video kind of educated you on why other people think like me and why people invest in higher yield funds or crazy yield funds or lower yield or dividend or growth. Like everyone has their own thing. Different things work for different people. No one is in the right, no one is in the wrong. Like I was saying, as long as you find a way to make your money work while you sleep, as long as you invest in good assets, you're setting up yourself for the future. It's not a competition, it's not a race. So yeah, that was it, guys. Hopefully you guys enjoyed the video. I'm currently around at the time of filming the video, 1,150 subscribers. Thank you so much for everyone subscribing. And if you enjoyed this video, leave a like, drop a comment. Let me know what you guys think about this video. Was it cool or not? I have my email here that's open. If you have any questions, inquiries, whatever, let me know. I'm trying to find some YouTube ideas. Like if you guys have some very interesting questions, I'll make videos about them to answer these questions. And I plugged my Twitter here. If you guys want to follow me, feel free. I don't really tweet a lot, but sometimes I do tweet about some financial news or income investing and all these things. So yeah, until next time, guys, take care.